Hello, very good dear subscribers, and welcome to a new video on the channel. Today we have the special monthly video reviewing my portfolio starting from €0 with you. Get ready to discover my August pick. As always, first I would like to analyze a little about the evolution of the YouTube channel and how I see it in a couple of months. As you can see, the evolution during this last month has not been so positive since we grow less than I expected in the daily number of visits, and we have experienced a slight deceleration in daily new subscribers. Wow! This month we have exceeded the goal of reaching 1550 subscribers. So for this month the goal will be more ambitious and will be to reach 1750 subscribers. Do you think we will make it? The evolution of the investment made last month has not been good, as it has been down around 4%, but in overall the portfolio has performed in a positive way with near 3% growth. Starbucks, Texas Instruments and Nike are the best performers this month with over 10% growth, while Hershey and Texas Roadhouse are the worst performing ones with almost 5% downside. Remember that this is a very long-term investment, and that the objective is not to obtain a high return in the short term, so this large drop of Comcast since I made the purchase does not worry me too much since I fully trust my estimates of the intrinsic value of them. The good news is that during this month we have received 3 dividend payments. Specifically €1.20 of ABI, the first payment of this company, €1.31 from Starbucks and 99 cents from Texas Instruments. That makes a total of €3.50. This month I will continue choosing a company that I have in my portfolio in order to reduce my average cost price, and due to the new expectations in interest rates cuts, I have seen the opportunity to expand Vici before it goes up. That is why this month I am going to compare 4 different companies in the real estate industry, such as Vici Properties and Realty, which are more high initial dividend yield than our companies, or companies that have less initial dividend yield such as Welltower or Equity Residential Properties Trust that also have better growth expectations for the future. In order to better evaluate each section that we are analyzing, I have decided to create a Google Sheets table in which we will place the score obtained by each company, like the previous months. Let's start by checking the dividend safety. Both Vici and Equity Residential have a very poor dividend safety below 70, while Realty Income has a better dividend safety of 80. Finally, Welltower has a dividend safety of 70. Regarding dividend yield, Vici and Realty are the only ones who have a dividend yield above 5%. That is what I request for a REID. That is the range I am looking for. However, if we look at dividend growth, the situation changes completely since Vici Properties is the only one who has a decent growth. Additionally, Welltower has had some dividend cuts in the recent years that lead to a negative dividend growth during the last decade. Continuing with the evolution of the adjusted funds from operations per share and in absolute terms, only Vici and Realty Income have almost double-digit growth evolution, while Welltower and EQR are more flat during the last decade. Now, if we look at the evolution of free cash flow per share over the last 10 years, Vici and Realty Income had a positive evolution again. However, EQR and Well have had more flat evolution. It is also very inconsistent with drops in UPS. As I mentioned in my previous videos, I want to make investments in companies that make buybacks, however only no one has a clear buyback program. In this case, Vici can be the exception due to its recent IPO only 7 years after them and needs more capital to start growing faster. But the other 3 companies have a longer trajectory, and this insane growth in shares outstanding is a clear sign to avoid these companies. The price/earnings ratio is a good indicator to check whether a company is undervalued or overvalued, in addition to our fair value analysis. Realty Income and Vici Properties are below the 5-year average price-to-earnings ratio, while Welltower and Equity Residential above them, indicating an overvaluation of their price. Moving on to yield on cost, here Vici and Welltower are the clear winner with around 5% compound annual growth rate over the last 5 years, while the other 2 companies have less yield on cost than current dividend yield. Finally, we will see the total return that each stock has offered during the last 5 years. Here Vici is also the clear winner with almost 100% total return, while Welltower's total return is also good over the real estate ETF, VNQ 1. But the other two are below 10% in total return in the last 5 years and also below the VNQ. Once we have all the values of the scores obtained, what I will do is multiply the average of all the sections by the score obtained in terms of dividend safety in order to more efficiently adjust the results to its security. Well, as you can see, Vici has obtained the highest score due to his attractive price to earnings and dividend and adjusted funds from operations growth. As a result, Vici will be our pick of September, and this month we also buy a stock that I bought for the second time. Then we enter the Scalable Broker and carry out the operation, looking for the Vici ticker. Remember that I will always try to make a purchase of around €100 so that the commission is less than 1%. So introducing 5 shares we would make an investment of €129.63, so adding the commission of 99 cents, the investment amounts to €130.62. I would like to emphasize that I made the purchase on the 29th of May after a huge drop in Vici price, as you can see in this TradingView graphic. Well, we go on to write down the purchases made in our Google spreadsheet. So I put the date on which I made the purchase, the Vici Properties ticker, and finally I have to look at the euro to US dollar exchange rate to have it as a reference. As you can see, it gives me a total of €130.62. Since I have already placed the ticker in the first column, it has automatically added the number of new shares and the new average price per share. Surprisingly, with this new purchase the price return goes from 6% to around 12%. Additionally, this investment will allow us to reinvest 0.50 shares annually via dividends, when before they were only 0.22. Impressive, right? As we are already in the month of September, I will move on to the monthly value sheet, and in the month of September 2024 we will write the €1,876.67 that our investments are worth in the market. This month the portfolio made an upside of 3.23%, which is less than the 6.25% that VOL, S&P 500 ETF, has obtained in the same time period. So this month we underperformed the market. This has been all for today, dear investors. A pleasure, as always, to receive your great support. Remember that these videos are not investment recommendations, and it is necessary for each of you to do your own analysis and consult a financial expert if necessary. If you like the video, don't forget to subscribe, hit the like button and activate the bell so you don't miss any of my interesting videos. Thank you for watching the video, and tell me through the comments what you think my portfolio will look like next month.